Hey everyone, how's it going? I got a very interesting day. Some of you noted that I have my voice back. Yes, I do. Thank you very much for your concern. I'm not feeling 100%, but I'm much better now. Thank you. So one thing before we get started, the rest of this week, I'm going to be moving around quite a bit. So from starting from tomorrow through all the way the following Monday, these videos are going to be delivered as recordings rather than live. Also, that probably means most likely I'm not going to be able to do the morning video. So most likely it'll just be one video a day and it'll be in the afternoons. So that's just for this week only, all the way through Monday until I get back from my travels. So today we were talking about how we were expecting there to be quite a bit of volatility, but not necessarily directionality, not necessarily moving all in the same direction. And that second part of it, I got wrong. Obviously, we got quite a bit of movement today in the S&P 500, up 1.42%. The QQQ is up 2.08%. That's a very large amount. Then we have the Dow Jones. That was the one that was starting down quite a bit, and you can see that it's still not as high as the S&P or the QQQ, but it is, it did recover quite nicely, and it is up 0.58%. And if we look at small cap stocks, they're up almost 2%. So QQQ outperforming today, even the small cap stocks. But when we look at things in the grand scheme of things, we don't want to get too excited. So I had a professional trader friend who was looking at this yesterday, and his commentary was, yeah, we pulled back, and his belief was that we were going to, what did I just do there? That we are going to move up and kind of test these highs right there before coming right back down. He said the professional guys are going to come in, they're going to sucker people in into thinking we're going to go long, and then we're going to smash them down, and then we're going to engage in that pullback. That was his plan. He's a professional trader. He's got hundreds of millions under under management. So if that's what he's engaged in, then well, it looks like the plan so far today is coming into fruition. So it looks like he and others are executing on that plan. Of course, we have to also consider algos. And algos right now, this level right here, or this all-time high right here, is an excellent place for algorithms to really start driving prices downwards. So we are up quite significantly today. This does look very much like a bounce off of the EMA 20 and the S&P 500, but I'm not going to get too excited about it because we did not pull back far enough for me to see really all-time highs. We'll match the all-time high. We could maybe go a little bit beyond it, but just from this tiny pullback here, I'm not really seeing a huge extension of this right here. If anything, if I try to draw this curve, I'm not sure if I'm going to be able to without my draw pad set up. But that's how do I okay, this paintbrush tool. So this is not linear, right? Oh my gosh, that was not what I wanted to draw, but this is not a linear movement. You can see that this curve very far from it. It's not even close to linear movement. This is it's not parabolic movement either. You can see that this is even further away than it was from linear. What this is limited. This is a reverse parabolic. This is limited. It's up faster and faster and then slower and slower. And in fact, we're in this region right here where we are basically just flat. Okay, where's my ray? There we go. We're just flat right there. No, not a ray. I just need a line segment. In any case, you can see right here, we're just flat right here. So this is not making for an exciting bull run. We sort of had it in stages, actually. We did it like this, parabolic, then flat, then up, then curving, this kind of a limited curve flat, limited curve flat. We've been stacking them on top of each other. This is not normal, very healthy, strong, bullish behavior. This is kind of getting limited out. We got over exuberant and then we thought maybe we'd get rationality back, but instead we got over exuberance. And then we thought we'd get rationality back, and we got over exuberance. And then now we think that we're going to get rationality back. We'll see. Maybe we go for another round, but if we do, then we wouldn't really expect it to behave any differently than it has, right? It's sort of like this. So if it does, then I would expect it to do the same thing. And that means my upside is limited. I'm really looking for that pullback or that correction to allow us to change that pattern and where we can just go up or even parabolically up. So right now it's not looking like we have a lot of potential for really, really high highs. We can go higher for sure. We can match this all-time high that we have right here. We could go a little bit above it, but what I'm saying is we're not in for a screaming bull run just yet. We do need that pullback before that can happen. So I shouldn't have done all that. So the same thing is true for QQQ, except we got that deeper pullback in the QQQ. This almost did it, but I would say if we had reached this blue line or that MA50, then I'd be a lot more comfortable with the pullback that we had. Right now, it's still kind of, ooh, maybe not too sure, given that I do have a little bit of insight for some professionals about their plan, and given what I know about how algos operate, I'm still waiting for the other shoe to drop. I'm still very, very wary. Now that said, I don't want to get too short. I still want to be neutral, very, very close to neutral. If I successfully manage my portfolio to a point where it is neutral, then I'd still be making money right here. I would have lost some money right here, and I'd be recovering, and I'd be making money right here. So you just want to just stay very close to neutral and maybe a slight bias to the short side. And so sometimes that's a difficult balance to strike sometimes, and it can be difficult. Being patient for that strategy to work out, because sometimes you lose, like today we would have lost a bunch of money on the shorts, on the hedges, but your portfolio may not have benefited as much depending on which sectors you were in. And then you'd be like, wow, on a day like this, my hedges made up all my losses, and then they overpowered my gains inside my normal positions. It seems like this hedge is hurting me and there's no point to it and I'm going to get rid of it. Well, that's when the pros come in and the algos come in and smash you down, and then you lose all the money on the longs that you have, and now you have no protection. So we want to be very, very careful that we don't get lulled into complacence, because that's what these guys are counting on. Oh my gosh, look at this huge move. We bounced off of at least an S&P 500, we bounced off of that EMA 20, and look how strongly we're moving up. I get this fear of missing out. I jump in and I start buying a whole bunch of longs. I don't have any protection. I get rid of my hedges, and then bam, they slam it down. So we want to be very, very, very careful of that. What we might do is adjust our shorts, adjust our hedges. If we were just a little too short, or now that we've gone significantly higher in a single day, then we would have lost a whole bunch in that short quickly. And then the good news though is that however much you might have lost in your hedges right now, there's a lot less room for you to lose in a hedge going forward. So it has a reverse chart. It looks like this. So at the beginning, I might lose a whole bunch the first couple days, but then I lose less and less. Even if this market goes screaming higher, I have a limit to how much I can lose. But if it goes well, then it starts doing the opposite. It starts doing the opposite. If we shoot higher, then it'll do the same thing. That first one was right. It'll make money faster and faster as we head upwards, if in the direction that we're protecting against. In this case, it's confusing because I'm actually protecting against a downward motion, but I'm drawing an upward motion right here. So let me just verbally say it to you so you don't get confused visually, is the if this has shot up, and now from now on, no matter how high it goes, my loss that I'm going to suffer from my hedge is limited. But if it does pull back down, the more it goes down, the more money I make. So hedges make more and more money, the worse it goes against you. And then, I'm sorry, the worse it goes in the direction that you're protected. But if it goes against you and it goes in the direction where you're not protected, then you lose money quickly initially, and then less and less and less and less. So that's the beauty of the hedge. On the way down, or I guess in the direction of loss, the initial shock can be painful, but then it's fine after that. And then if it's benefiting you, it just gets better and better and better as it goes. So we're going to hang on to our hedges. We're not going to freak out because of this. We might readjust or reduce our hedges a little bit if we want to, but really, if you already suffered the majority of what you can suffer from your hedge in this initial move, why would you reduce it? Because what you're then saying is, oh, I'm going to protect. I wish I had my camera so you could see me motioning with my hands. But we would say, if this was the maximum, oh my gosh. Let's try to find a word. Maybe I'll be able to draw a little bit better in Word using a mouse. Okay. So if I can, if this is the maximum loss, should I draw it in the reverse direction? Maybe I should. So if I'm losing 0 and the most I can lose is 100, if I've already suffered all the way here, like 80% of my maximum loss, then by cutting short my hedge and say I'm going to reduce my hedge, all I'm doing is reducing this right here, that leftover 20%. If just say I cut my hedge in half, then basically I'm protecting against 10% loss of the initial position, which is only a couple $100 anyways, right? That was the purpose of the hedge, is you don't try to put hundreds or thousands, and then you're trying to have a really high reward to risk ratio, so that if you're wrong because you're counting on your hedge to be wrong, actually it's just insurance, then it doesn't hurt you that much. So you're just trying to protect yourself and say, hey, I can only lose another 10% instead of I can lose another 20%, but then you lose completely on the upside, because if we get that sudden reversal, the value of this will suddenly skyrocket, and you will move up to 10 or 20 or 100 or 1,000. The more position goes in the direction that you're insured, the more higher this goes. And if I just cut my position in half, then my benefit gets cut in half as well. If I would have gotten 100, I would have only got 50 at this point. So the amount that you're saving by cutting yourself short on your hedges is generally not worthwhile versus the protection that you lose because of doing something like that. So we want to make sure that we're not letting fear drive our emotions, especially when it comes to hedges. People think it's just really important when it comes to your positions. Well, it's even far, far more so on your hedges, because your hedges lose money most of the time. They're supposed to lose money most of the time. I lose money on my car insurance the vast majority. Actually, my entire life I've lost money on car insurance. Right? I never had an accident so bad that I needed all my car insurance to go help me repair and replace my car. So I go into a hedge or into insurance with the expectation that I'm going to lose money. But if the event comes that I actually need it, then it's going to save me a whole bunch of money. So I lose a little bit over time every day, and then that one time it comes and it saves me. So that's how we want to look at hedges. We don't want to look at hedges the same way that we look at our positions. Otherwise, we're going to start acting and behaving the wrong way when it comes to our hedges as well. So let's take a quick look at the sectors that we went into. It felt like a lot of tech and airlines, but I could be wrong. Let's take a look. So semiconductors and tech for sure. Small cap did very well. Retail. So consumer discretionary. It looks like a lot of risk on trades right here. Communications. And then we went away from energies quite a bit. And then away from, actually, no, just energies. Everything else was still kind of up. Gold and energies and silver. So all the most commodities, basically commodities, everything else was actually positive. So broad spectrum, broad sector movement upwards. It was really just energies that lost out. Let's take a quick look at energies because those were getting bid quite well. So we gapped down. We gapped down in energies. We're now below that MA200. So any positions that we were holding in energies where we were expecting that perhaps we were going to break out above this MA200. It looks like we are going to. Then we held at the MA200 for a couple days. Now we've broken down. So that is an invalidation of the basic assumptions that we would go into any trade. That chart that you might be using to pick a trade that told you to, hey, pick this particular energy stock. Well, the fundamentals of the sector and fundamentals of the market trumps that. So that counts as an invalidation of your trade. So if you are in any energy stocks, you would consider closing that out. Like for me, all of my energy stuff is going to get closed tomorrow morning because that is no longer, we can no longer expect a bounce in uptrend. It might still happen, but at least it's further down the road. It's not imminent anymore. And we trade based off of presence. So the imminence of a potential move. So the can has been kicked down the road. So we're definitely still chopping sideways. It doesn't mean that energies are going to fall. It just means that the opportunity, the immediate opportunity for it to move upwards is now extremely diminished. And so we better reallocate our money where it might make money for us faster. Okay? So that's it for today. We're going to just be cautious, be careful, keep on sticking to your plan, and don't let these big movements like this freak you out. There's a lot of potential for bull and bear traps in these markets as we've been seeing intraday, but we're starting to look like we're playing this game on the daily basis as well. So watch out, have fun, and if you have any energy positions, my personal strategy, I'm going to be closing those out tomorrow morning. Have a wonderful rest of your night, and I will not see you tomorrow because we're going to be on recordings for the next week.